The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. We got some inflation data out this morning in the market, liking that data, catching almost a 1% pop from where it was about 35 minutes ago. S&P's up 33%. That's 0.8% in the green, trading at 41.67. NASDAQ 100, you're up almost a full percent right now, up 127 points, 13,393. The Dow up by about 0.5%, 33,805. And how about the Russell? Up 1.65%. You want some volatility, man. How about the Russell recently? Russell up by almost 1.7% at 1784. You got Bitcoin catching a bid. Remember when Bitcoin was trading basically with a NASDAQ 100? Maybe we'll get back into that rhythm. Bitcoin up about 2% right now, 28,315. You got crude. Quite the acceleration from last week's lows. We're pushing highs that we had yesterday. Just got above that level briefly. We're trading at 73.69. We talked to our man Teddy Kegstad at 40 past the hour. We always talk a little bit of crude. We'll talk the Forex markets as well. We're talking to our man Kevin Hincks coming up after the first break. Be interesting to get his take on the market reaction to the CPI data this morning. Gold contract up about $4 at $2,047. You jump to notes and bonds. That may be the story right now. As you got higher price and lower yield, you got the 10-year. Up by 14 ticks at 115.20. The 30-year up 25 ticks at 130.15. We jump over to the volatility index. 16 handle, 1645. Volatility getting sucked out of this market, man, as we cross a pretty important point in terms of the CPI data. We'll get into the numbers in a moment. But maybe the market just loving that there was no surprise to the downside here. If we go ho-hum as expected, then as expected, right, means that the Fed potentially pauses and sees how we can see how we go from there. So we cross that data point. We get PPI tomorrow, but PPI nowhere near as important as the CPI data we got this morning. We jump over to the dollar index as we wrap up the roundup this morning. And what do we got? We got lower yields, we got a weaker dollar, and we got a higher market. I mean, that's the relationship we had all of last year, right, when rates were in focus. So rates in focus today, dramatically in the market saying, hey, guess what? This inflationary data, it's not so bad. It might line up to the fact that, guess what? The Fed, they might be on the ball in terms of pausing. Maybe they have the ammunition to do so, and maybe they even have the ammunition to be on board with cuts sometime down the future if we really get a walk back of the inflation. Now, I give you that whole story. I give you the market up 33 points, okay? But as we get back to the S&Ps, folks, all we're back to is a week ago before Chairman Powell. Yes, before Chairman Powell. Okay, all we're back to is Wednesday prior to Fed Day. We're basically back to Tuesday morning before that quick acceleration began. Now remember, that's when the bank stocks were accelerating lower on last Tuesday. Wednesdays was Fed volatility. Thursdays we digested everything. We got Apple earnings after the bell on Thursday. We got jobs on Friday. We accelerate back, and where are we back to? Basically right back to where we ended last week, man. Pretty interesting in terms of the volatility we're seeing in this market. We're trading at 41.66 right now. And let's jump over to the headline. As the Journal puts it, inflation eases to 4.9% in the 10th decline in a row. Now, core is what it's all about right now, folks, okay? Because it's not fair to compare things overall when you have energy was just bonkers. It's important to remind you how little the headline number means, okay? It's a little bit of the bear case saying get that headline number out of your vocabulary because you back up crude, okay? And we are getting numbers right now for April. And to back things up, crude last April was chopping around between about, you came into the month at above 100, you made it below 100 on a few times, you had a low of $92. The week of April 11th, and most of the occasion, though, you were sitting at about 100, about 95 to 105. We're trading right now on crude at about 75 to 80 for the month of April, let alone you actually came into the month Yeah, with a 69 handle the week of March 27th, and you get into May with a 63 handle. So the headline number, very distorted by the price of crude, okay? Focus on the blue. Focus on the core numbers here. Yes, we are declining. But boy, folks, 5.519 to be exact. I always say, why don't they give us more decimal points? Good of the Journal to stretch it out to 3 decimal points for us. You're going to hear 5.5, which is the core number, pretty much what was expected, okay? You got to get it back to 2, folks. Well, that's in April of 2023. From September, which is the high, okay, from the peak of core, we were at 6.6. So we've dropped 1.1% in, what is that, October, November, December, January, February, March, April. 7 months. We've dropped 1.1% from the high in 7 months. Well, if we just go on that same pace, and I don't even think we're at that pace, because actually the steepest drop-off was the first few months, right? We went from 6.6 to under 6 in 2 months. And then it's taken us 5 months to go 0.5%. Well, 5 months going 0.5% means you're basically ticking down 0.1% every single month from those 5. Well, folks, we're at 5.5. If we're going to get to 2, that's 35 months it would take going down 0.1%. That's almost 3 years to get it back to 2%. And that's at this level. Things should be going quicker right now. I'm trying to give you the longer term picture to keep in context here, because things should be dropping quicker at a faster pace, would be a better way to say it, from the peak. Well, in the 7 months since we saw a peak in core CPI numbers, which was September of 2022, we've dropped about 0.7. Is that right? No, 1.1. Yeah, 1.1, excuse me. But you dropped off 0.6% in the first 2 months, okay? So since November of 2022, we've dropped about 0.5% since April. That's 5 months. We're dropping 0.1%, man. We got a long way to go. So keep that in mind. The market, loving this number, as you could expect, but boy, some pretty lofty numbers, man, when you get into it. You go over to the Bloomberg article. Again, they talk about the headline number, 4.9%. I would focus on the core number, and you could even focus on the services number as well. It's the first sub 5% reading in 2 years for the headline number, but again, oil distorting so much what's going on there, so be careful getting caught up in the headline number. Month over month, 0.4%, month-over-month core, 0.4%. As I mentioned, 4.9 on the headline, and we get core CPI year-over-year right in line with estimations. So it's a report that's basically right on the ball here, and the market is loving that. So it looks like all the market's worried about is surprises. Now, folks, this is the same chart I was just talking about on the Journal, okay? Don't get caught up in the green, in the yellow, which is the headline. Don't get caught up in it, man. The Fed's not going to get caught up in the fact that oil went from $130 to $65. That's not solving their problem. That's not the problem in this market, man. The problem in this market is core CPI, which excludes food and energy. That's what they're focusing on. And boy, folks, you got to get back down to like 2% and just use a real simple statistical model, man. That's a long way to go. Stay tuned. We're going to come back talking to our man, Kevin Hincks. We jump back to the markets this morning. We got the S&Ps pushing highs right now. We're up 38 points, man. Back to a 5-minute chart. You charge up to 41.73 in the S&Ps. You get the NASDAQ 100. We're up 140. That's an even 1%. The Dow catching a bit even since we came on the air. Up about 0.6%. And how about the Russell? Again, pushing 1.8%. Stay tuned, folks. I imagine we'll have some volatility today. We're coming back talking to our man, Kevin Hincks from the TD Ameritrade Network. Be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got markets green across the board with the S&P right now up about 32 points. That's in the green by about 0.8%. Let's jump over to our man Kevin Hincks to talk about the market this morning. Folks, you can check out the program Fast Market every trading day at 12 noon Eastern Time right here on Tiger TV. Kevin Hincks, Tom White, the whole team. They got some great guests. I heard Randy Frederick on there yesterday talking about the markets. And let's just jump into this CPI number. Good morning, Kevin.
Good morning, Tommy O'Brien. Yep, looking at this morning's CPI data, I refer to it as vaulting over a very low bar. I think the month-over-month data both came in flat. The year-over-year data came in a tenth less than last month, in line with the expectations with the core, a tenth light in terms of the year-over-year data. And look, when you break into the tables, used cars and trucks up 4.4%. Energy overall only up 0.6. Why? Well, fuel oil down 4.5%, gasoline up 3%, food at home down 0.2, food away from home up 0.4. Shelter up 0.4, apparel up 0.3. Tommy, a lot of little numbers on the tables here for this CPI data. Those were the biggest ones. Utility piped gas down 4.9%. Those are the big numbers. All the rest, relatively small, relatively muted. I would call this number and the market reaction, they didn't scare the children and show any sharp upward moves in inflation, but it also isn't going down very fast, Tommy.
Yeah, it's pretty interesting to see the acceleration right out of the gate. The numbers come out, and as you mentioned, I appreciate you going the walkthrough, pretty close to in line with most of the estimates. Month over month, even the headline number just 1/10 off, and the core number pretty much on the line at 5.5% like we talked about. And the market loves that number, so I was thinking to myself saying, hey, maybe this is the market saying we got over the hurdle, as in it was a little worrisome with everything riding on that inflation data potentially, if it ever ran hot, maybe it does some damage to the whole narrative of what came out with the Fed potentially pausing. The market gets over that hurdle so far. Looks to be as expected, as hoped, whatever you want to call it. Decent number as expected. And I think, what do you think, Kevin? Because as of now, we've been so wrong sometimes, some of the analysts, right, especially over the last year, as inflation really roared their head. Maybe that's kind of in the back of everybody's head a little bit, and we finally get a number that's pretty much in line. And if we're getting numbers in line, the market doesn't like surprises, and if we get no surprises, maybe that's the deal right now as we pop to the upside. With that in mind, we still got some earnings, Kevin. I'm sure you're going to be talking about the economic data, but what are you guys talking about on Fast Market coming up at 12 today, man?
Well, the high-profile name of the day and of the week, Tommy, is Disney. Like Foley will do a presentation on that will frankly show that there's a reason that Disney stock has moved from $203 at the beginning of 21 to $102 now, Tommy. The expectations are for lower. Digital is struggling. There's parts of this massive company that are doing well, but there are other parts that call for massive cost cutting. And I think that's what we'll talk about today in the air. How did the earnings come out? Well, the earnings expectations for Disney are all over the board, Tommy, as you know. They're anywhere from 93 cents to 83 cents. That's versus $1.08 a year ago. So it's a massive company with a lot of moving parts. We got to break it all down, and we'll take a look at it today. Besides that, there's JD.com, there's Trade Desk. We'll look at some of those names also, but really today's show will focus on Disney, Tommy.
Nice. I'm going to be watching, man. I have some Disney in my retirement account. Fan of it long term, but boy, that thing's gotten crushed. And pretty interesting when I pull it up on the Thinkorswim platform here. Kevin, you're actually back to where it was about a year ago, man. I got it up on a weekly, the week of May 9th, a year ago. You trade down to below $100 for the first time. And where are we sitting at? Basically $103, but you're up $1 today with the market coming into their numbers. And I jump over to the Analyze tab, as you taught us, about a $5.46 move. Not that bad, 5% move in either direction, Kevin, when you think about the fact that, as you just laid out, man, there's a lot of volatility with this equity in terms of what they're spending and a little bit of an overhaul, the executive suite going on as well. Kevin, I appreciate the time. Doesn't get much busier than mornings like this, so I appreciate you taking the time to come on, talk to us, give your opinion, man, and we'll be watching at 12 o'clock today, man.
Thanks for having me on, Tommy.
Always a pleasure. Folks, check it out. Fast Market every trading day at 12 o'clock. Our man Kevin Hincks, Tom White. They'll be talking about Disney today. And yeah, you talk about a slide, man. From 200 and change to 100 and change. You make a low at $84. You put this thing back on. Let's put it back a little longer term. We'll take a little look at Disney, all right, as we get their earnings after the bell tonight. So as I talked about, you're looking at about a $5 move in either direction for Disney shares. And not only are you right back to where you were a year ago on Disney, you're back to where you were in February of 2015, which is just remarkable when you think about this equity 8 years out. They've built a platform like Disney Plus, okay, but what's been happening? Well, the movie theater business is changing dramatically. That's where they make a lot of their money, okay, so that's a lot of volatility. And spending. They are spending tens of billions of dollars on content. Yeah, that's going to eat up your profitability when you're growing a direct-to-consumer business, especially at a time when you get the movie theaters shut down. That's hurting things. But guess what, folks? There's only one Disney, man. And the brands that they control in the long term, yeah, I imagine long term, folks, okay? Doesn't mean this thing can't pull back, and it especially means, when you're looking at a market sitting near 4,200 right now, we got over the CPI print, but I'd encourage you to realize, folks, core CPI is still at 5.5%. We got a long way to go. This is 1 month of data we get. Before the next Fed meeting, we're going to get a lot more economic data. We get PPI numbers tomorrow already, but then we get a whole extra month of data. This is the April data we're getting. The data we're getting right now began almost 6 weeks ago with April. Okay, so what do we get? We get all the May data before June. We still got a number of 5.5%. The reason I say it is because market-wide right now, I see some risks with the market sitting at 4,200 with the potential for a lot of unknowns in this market. That'll bring down everything, okay? So when you're looking at some of these equities, yes, you risk some downside slide if you're in them, but longer term, getting into Disney at 2015 prices right now, I mean, folks, the services, the Disney, what did they just announce yesterday? I think that they're not going to, you don't need reservations all the time anymore. Saw some headline on there. Folks, it's just a packed house. I tried to go to Disney last March. We were thinking about doing it for my birthday. We were going to be in Orlando, and you couldn't do it. They were sold out. Yeah. So I don't know if that's changing right now, but nonetheless, it's pretty interesting that I wanted to bring my family, my dad, my kids, and they wouldn't let us in the park. Think how much money you're going to spend with a family of 4 to 6 on Disney, on tickets, on everything in there, and they wouldn't let us in the park because they had so much demand. That's never going away, man. Okay? Being in Florida, we're so fortunate being in Florida, folks. I was at Busch Gardens this last Thursday, I believe, or Friday. I think it was Thursday. And I'm a member of Busch Gardens. And during the week, in normal times, the park's basically empty for all intents and purposes. When you compare it to what the park is like on a weekend, it's basically empty, right? It's not empty. I'm sure there's thousands of people in there. But compared to how many people are in the park on a weekend, it's basically empty. And my dad's saying, all the tourists are paying for it, and we get to use it. And it's basically the deal, man, because they wouldn't be able to support what they have. So being in Florida alone, it's amazing the privileges we have getting to use all of these tourist attractions, basically, like Busch Gardens, and they'd never be able to support them if it wasn't for all the tourist dollars. And that's never going away, man, and Disney's the biggest prime spot of it all. We're going to make it to Disney. Markets, pulling back a bit. We're 10 points off the high. We're still up by 7/10. We're coming back for the open, folks. Stay tuned. Don't go away.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got an S&P with a lift of about 0.7% in the green right now. You're right back to where you were at about 8:40 in the morning. You make it to a high of 41.73. We're positive by 0.7. NASDAQ 100 positive by 0.8. The Dow positive by 0.5% right now, and the Russell leading the way up 1.3%. Let's see how some of the big dogs are doing right now. Apple shares up 0.8%. Microsoft shares 0.6%. Google shares up a solid percent right now. We jumped to NVIDIA shares up 1.5% right now. Tesla shares up 1.6% right now. Let's see how Meta's doing, up 1.1%. Green across the board. Let's see how some of the banks are doing. JP Morgan up by 1% right now. Bank of America up by 0.8%. It is green everywhere in this market, folks. And as our man Basil Chapman would say, though, the day is young. We're a minute into trading. And as we see on some of these important days, we'll see if the rally holds in this market. Okay, jumping to some other news. We'll stick with interest rates. We'll go to mortgage. So mortgage demand surged after the Fed signaled a potential pause in the rate hikes. The average contract interest rate decreased to 6.48%. That's a new normal, man, when you think about where we were for so long. Applications to refinance a loan jumped 10% last week compared with the previous week. Folks, I've said it before, percentages on small numbers can be deceiving. Remember that phrase, because 10% on a small number is nothing. Okay, people who are refinancing their home right now is a very, very low level. Jumping 10% from a very, very low level is not a big deal at all. Applications for a mortgage to purchase home increased 5% for the week, but 32% lower than the same week a year ago. I mean, there's an exact example of it, right? And that's not even... I'd say that that's probably not as drastic as the refinancing market, because if you're buying a home, usually you have to get a mortgage, okay? But you don't have to refinance. So, I mean, to those people out there that are refinancing right now, probably unfortunate in that you probably should have jumped on that horse about a year ago if you saw it even possible. So not sure who's falling into that. You know, things happen in life. You got to tap capital, etc. There's many reasons why you'd have to do it, but you're just paying such a higher interest rate than even a year ago that even if you even consider that you needed money and you had equity to tap, you probably should have done it during the time. And hindsight's always 20/20. I get that, man. But, you know, what do, right? You tap your credit when you don't need it. That's what you do, right? You don't go to the credit markets when you're stressed because they're going to charge you an inordinate sum of money. You go to credit markets when you don't necessarily need it. So keep that in mind longer term. But nonetheless, yeah, you have mortgage applications rising a bit, but you look at those levels, we're at 6.5%. I imagine that's not going to drop anytime soon. Yeah, and there's your difference, right? We talked about the applications to refinance, up 10% in a week, down 44% from a year ago. And that was already in the hiking cycle. Remember, Fed started hiking in March. Okay, so if you were thinking about refinancing and the Fed was on a hiking cycle, we're now two months past that. So things were already a little bit rough in terms of there. But yeah, you could argue they responded in terms of an uptick on a weekly basis in that mortgage market. All right, let's talk a little bit of earnings. Roblox reports wider than expected loss, but they have more users. They beat expectations on the top line, but wider than expected loss at 44 cents versus 40. They beat with 774 versus 766. Average daily active users, 66 million, up 22% year over year. Engagement hours, 14.5 billion, also up 23% year over year. Whew. Quite the numbers, man, when you look at it. Net loss of 268 million, though. Not bad, losing more than $250 million in 90 days. And we jump over to their chart, though, and Roblox. Look at that, man. Whew, they get it all back. Not sure what they said on the conference call, but it began at 8:30. Hadn't checked on this thing since it was trading lower on their numbers at 8 in the morning. 8:30, and what do? You're positive by 3%. And that's probably like in the market as well, as in this is a growth stock, and growth stocks, we're back to the normal situation of interest rate movements this morning, as in we got a weaker dollar, right? Let's check back in on it. Yeah, we're catching a bid, though. We're up from 102 to 101.43. Check that out, man. If that continues, that'll cause some angst in the market. We get the 10-year. I mean, we're only back to where we were basically at the beginning of Tuesday in the 10-year. Okay, 115.15 back then. We're trading at 115.18. You're still positive by 13 ticks right now. But nonetheless, we have lower yield, stronger dollar, stronger markets on that, with growth stocks leading the way. Bank stocks are always going to be bonkers right now in a big way. Let's see how some of the most volatile are trading. Yeah, PacWest up 3.4% right now. Western Alliance up 2.6% right now, holding pretty steady for some of those regional banks. All right, let's talk a little airline. JetBlue, been taking it on the chin recently. They're adding incremental perks like early boarding and booze to keep travelers reaching for status. Interesting, right? The Mosaic Status Program, it's going to be broken into 4 tiers, the latest carrier to rethink its loyalty program to reflect shifting travel habits. Yeah, they're fighting for demand here in a big way. And they're going to break up their tiers to 4 tiers. Let's see. Perks when a customer moves up a level of elite status, like pet fee waivers or a $99 credit card statement. I mean, I don't know, man. You know, consumers are pretty conscious right now to make sure they're making the best decision for their checkbook. And you got JetBlue up about 0.3%, underperforming the market. I'd be careful with this one, man. You know, charts don't lie sometimes, folks. And boy, I used to love JetBlue as an airline. Haven't ridden it in a while. I probably will jump back on. No, I don't know. Maybe I won't jump back on it. I mean, look at this chart, man. You are at the doldrums of the pandemic low, and we didn't know that anybody was going to be flying around on a plane ever again. And that's where you're chopping around and you're pushing lows on JetBlue right now at $7. Boy, pretty remarkable, right? And look at this thing. It chopped around at under $7 since 2007 all the way to 2013. Before, what did you do? You accelerated right into the high of 2003, man. Absolutely remarkable. This chart, you know, maybe you throw a gamble Powerball ticket at this thing if you buy it at $7. But boy, there's a possibility here that things are just not going well somehow for JetBlue, because you take a look at that chart, okay? And even if you just back things up recently over the last 5-10 years, let's put it on a 5-year weekly. Okay, so you can see the full drop-off from COVID at about $21. You get it all back before the slide really began. Look at this American, man. That's not much better, right? They were already on a slide down to 29. You're trading at 14. Delta drops from $60 down to 17. You're still trading at 37 right now. United, man, these are tough charts even going back, man. Everybody's traveling. But it is a tough time to be in an airline when you pull up those charts. Not back at the doldrums of the lows, right? As in JetBlue's in a class of its own right now, sitting at the pandemic lows of about $7. But all those charts looking a little rough, man, especially in the environment that we're in, with oil sitting at $70 and just travel through the roof. Demand for services through the roof. You know what's going through the roof? Not the market, as we got a little bit of a drop-off. It's going to be interesting to see how today goes, folks. We got the S&P right now up by 0.6%. We just gave up 15 points just like that. We're trading at 41.58, and we jump over to the dollar index, because when we come back, we're talking to our man Teddy Kegsack. Great to talk a little bit of Forex, man. We got some action in the dollar index. We're on a 3-minute break, folks. Go sign up for the Tiger Forex Report right under the newsletter tab. You got 3 minutes. By the time we come back with our man Teddy Kegsack, you'll be in there. He's got an archive webinar. You got a 30-day money-back guarantee. You cannot lose, folks. Check it out. We'll be back with our man Teddy.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got a little bit of a reversal going on right now. Market just gave up 30 points, man, from where we were trading at 9:10 in the morning. Even after we opened, we just gave up 30 points. With a quick drop in the market, we got a little bit of a reversal going on in the currency markets as well. As you have the dollar index almost pushing 101.20, just like that. We're at 101.51. To talk about it, folks, let's jump over to our man, Teddy Kegstad. You can read Teddy's Tiger Forex report, folks. He puts a new issue out every Monday for subscribers. He puts out updates when warranted. He just hosted a subscriber webinar a couple weeks ago, 60-minute webinar for the second quarter market forecast. He talks about a bunch of great information in there. You get that when you sign up as well. Check it out on the front page of TFNN. You can subscribe. It's $97, folks. It comes with a 30-day money-back guarantee. You don't like it, for some reason it doesn't fit into your trading day for whatever reason, and folks, you're going to get value out of this newsletter, out of the webinar, but you cancel it, you get a money-back guarantee, and you get to keep all the value over that month and the webinar. And boy, we got a great day to talk to our man, Teddy Kegstad. Good morning.
Good morning, Tommy. Yes, we do have some good stuff to talk about.
So where do you want to start on a pretty active day in the markets this morning?
Well, we can start with the number. I think that the reaction in the markets is just showing you a really pump and dump rally, if you will, and especially like in the bond market. So, I mean, the reality of the number is that, okay, we're just not increasing at the rate that we were, but we're still going full steam ahead with inflation. So, and I think you have to really watch the bond market over the next couple of days, because a number like this, you would expect a reactionary rally. That's because just of a short-term blip of the release. As far as the overall reality, the market knows that there's something wrong, And I think you have to really put things in perspective. If you look at, like, for instance, numbers like CPI and stuff, they're slowing. But look at where the yield curve is. I mean, the yields, they topped out, back in October of 2022, and if you look at over the past, say, like month or two, we've been kind of buffering up against resistance, meaning yields have been pulling back. Now, that's all because you have artificial buying being brought on by the Fed and other central banks propping up the cash market, and the reality is, how is it after 4 rate hikes, that the bonds are trading much higher than they were 5 months ago, 6 months ago, 7 months ago? That doesn't make any sense, and it also, think about what it's doing to the banks. Banks borrow money from the Fed, correct? That's how they make loans. Now, the rate that they're paying is much higher now than it was 6-7 months ago. Okay, now if you're paying more for money, the banks are, and the yields are retracting, going the opposite way than they should be going, then how much money are banks making, especially when there's a banking crisis? So there's a lot of tailwinds I think we're going to catch from this over the next couple of months, especially. And I'd be very leery of getting caught up in this frenzy, thinking that inflation is stopping, yields are going to stay low and even possibly go lower. Anything can happen, but it doesn't make any sense mathematically, and I think you're going to see more and more where this is going to give a boost to the dollar short term over the next few months. And when it happens, it's going to be a violent reaction as well.
Yeah, you got to the dollar, and it's pretty interesting, man. The dollar, it's interesting. We're pushing kind of that low of January, and you've talked to us about the different pairings and the impact, and this is so euro dependent and so forth. But it is interesting. We're pushing those levels, and the market reaction today, we've talked about it before. I know you talk about the possibility, man, that we get some hikes continuing. It's always interesting on mornings like this, Teddy, this is my own take, where you see the headlines from great institutions that I love, man, like the Journal, like Bloomberg, talking about inflation easing, and then you get into the core number that's at 5.5%, and we are 14 months into a hiking cycle. It's kind of amazing that you get the easing notion, and I think this is something like the 10th decline in overall CPI. But as you know, man, that crude market, things get shifted around dramatically when you start bringing energy into things. The core number, 5.5, I was talking about in the beginning of my program, like 5 months ago, we were at about 6, and that's near the peak. And so if you're just dropping marginally from a peak, man, we got a long way to go, because if we can't drop from 6 to 5 quickly, what's it going to look like when we're trying going from 4 to 3, let alone from 3 to 2?
Right.
So
we have
we'll
a long journey ahead of us.
And as traders, it's great, folks, because you're seeing the volatility everywhere. Whether you brought up bonds, I was looking at bonds when you were walking us through that. I was looking at the dollar index, just magnificent moves, man, in both directions. Can we jump to crude a little bit, since I just brought up kind of some of the headlines, man? We've had some interesting action in crude. We hit $63 after I talked to you last Wednesday, and then from there we've popped back kind of into that $72 range. What do you think of the price of crude?
Okay, well, you got to realize we came off of, when we hit that low last week, we were coming off a very big slide. Over the period of a couple of weeks, crude dropped $20-some. So the bounce off the low from last week, I think, is very normal, to have a correction back to where we're at,
Sure.
So I think that the market was overdone on the slide last week. I don't think that you're going to see crude trending lower. I don't see us going down to, holding lower 60s, let alone going into the 50s. The only thing that would bring that on would be a totally decrease in demand. Well, how is it we're going to have a decrease in demand when we know we're coming into the summer? And if the travel and leisure business is really doing as well as they're saying, that means people are traveling. That means there's a demand for gas and for oil, So that part I don't see really trending. I see it maybe in a choppy wide range trade for the next couple of months. That's possible, maybe especially if there's some sort of increase in production on our end, and that would really be the only thing I think that would really get us to trend lower. It would be obviously if they open up the floodgates and take away all these rules and regulations they put in place a couple of years ago, So for oil, I'd be very cautious. I'd be a buyer of dips, especially when you have extremes like what we had going down last week. When you have a $20 slide in crude, and it wasn't really because it wasn't lack of demand driven, So that's where I have to say that you have to be careful with it and look for more potential to the upside.
And it is interesting, man, just pulling it up on the chart. We got a little bit of an exacerbated low in March, an exacerbated low in May. It got above $82, but this thing's almost been a consolidation since last November between only about like 75, 72, and 82. Just remarkable considering how volatile things have been overall. And since November, crude just kind of been trapped. You got outside of that area a little bit, but as you mentioned, you've kind of recoiled. And I just put a Fibonacci number on that pullback. Yeah, from $83 down to 63. And where do we just pop to? About a 50% retracement was all it was, up to $73. How about the yen? Can we talk a little bit of yen? Because I know that's always interesting for our listeners. What do you think of the yen pulling back today, 134.39?
I think that's all because of the number. This was when you have CPI is one of the biggest economic numbers that you have coming out on a monthly basis, and it's a very big interest rate number. So, interest rates drive is a functional pricing mechanism for the dollar or any currency. So when you have a big rally like this, meaning a pullback in yields, the dollar gets whacked by all currencies. So that's where, if you look at it, the pound made new daily highs. The euro is coming off a new swing low, and it's everything's retreating. Like the yen right now is on its close to its lows for the day. You saw the Aussie break out to the upside, but this is all because of that number. So if everyone really believes that inflation's disappearing or something like that, then it's sustainable. But this is just a news-driven reactive day, and that's where you got to be careful. Where you buy the rumor, sell the fact. So you got the pop on the number. You look at the euro. It only rallied what was it? Something like 60 pips today off that number. That's not a big move.
I pulled it up when you said it, the euro, and then I pulled up the pound, man. Quite the charts for sure.
So the yen's going sideways to higher. It's just
no wishing, no hoping, no praying, right? I love that from last week,
absolutely.
Man. Keep it up. Teddy, thanks so much, man. We'll talk to you next week. Have a great one, man.
Thanks, Tommy. You take care.
Thanks, man. Check out the Tiger Forex Report, folks. We'll be back to finish up the show.
The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have markets in the positive, except for that Dow, negative by 100 points now. You got the S&Ps up by 5, NASDAQ 100 up by 83. The Dow goes from trading at 33,800. We dropped 300-plus points in the Dow. We drop a solid, 33 points in the S&Ps. We drop a solid 100 points in the NASDAQ 100. And the Russell, man, the Russell just gave up was that 24 points? 24 points, man, in the Russell, which is more than a full percent from the open. Be careful today, folks. I think the market is adapting to some of the risks that we've been pointing out this hour in these markets, talking about, hey, it's just that there's many ways to interpret this data, folks. Inflation is easing. We hit 4.9%, the 10th decline in a row. All of that means nothing, though, because the headline number is so distorted by energy, okay? You got to look at the core numbers, and boy, things are sticky in the 5-handle. Things are sticky in the 5-handle, folks. Okay, doesn't mean the market's going to hell in a handbag in no time, but things are sticky, and things are going to get complicated, and we got a long way to go. And the economic data is going to be very important for a considerable period of time. As traders, be patient, folks, okay? Because we're going to get rip-roaring rallies in both directions for some foreseeable future. That's my perception. We might get rip-roaring rallies or declines, more so in one way or the other, depending on what way this market really goes. But you're seeing it this morning, man. We just got a rally of 43 points to the upside and 30 points down, and it's not even 10 a.m. this morning. Yeah, so keep your stops in place, okay? Don't be afraid to take losses. Keep your capital intact if you can, and make sure you're around to be trading in the next 3 or 6 months, man, okay? Because you don't want to open your entire clip, get burned by a rally. You don't have the funds to be trading when you want to over the next period of time. Take your stops. There's going to be other trades. We get PPI tomorrow, right? We're coming into a Fed meeting that's like 6 weeks away. We're going to get a ton of opportunities over that time, folks. Stay tuned. Markets in positive territory. S&P's up by 9, but it's a wild one today, folks. Thanks for starting your day with me. Stay tuned for our man Basil Chapman coming up with the Tiger Technicians Hour next. Have a great Wednesday, everybody.